Financially raw, real, authentic wisdom with Lourens from Retire Rich and Happy.
Good morning, everyone, and welcome to another episode of Financially Raw. Thursday morning, the 20th of October. We're getting to the end of 2022, and I hope you've had a fantastic year so far. So what are we going to talk about today? Today's show is all about how starting your own business can save you tax. A lot of people, if you look at the 5 steps that we teach people, it is the first step is invest in yourself, minimize your risk, become an entrepreneur, which is step number 3, starting your own business. Step number 4, invest in income generating assets, and step number 5, paying it forward. And we will have a summary of the 5 steps during the day as we run through the show. But if you look at those 5 steps, step 3 is becoming an entrepreneur. So many people want to start their own business. They want to create a business, become an entrepreneur. But I always get the question, but am I going to have to pay tax on the income that I earn? And my answer to that is, of course, because SARS will want to get their piece of the pie as well. But if you start a business, it opens up a whole range of tax benefits where most of the time, especially in the initial stages, you will get more benefit from starting a business than you would get in paying tax on the profit that you make on that business. And that's what we're going to talk about today. It is an article from a newsletter that I have subscribed to called Prestige Bulletin. I've been a member of their mailing list for many years, probably close to 20 years already. And they always have a lot of fantastic information. So if you want to get information from them, you can go to Prestige Bulletin. I think it's prestigebulletin.co.za. They give you information on stock tips, businesses that you can start, tax benefits that you can get, and just general financial information and different ways of thinking about money. So that is going to be our topic for today, how starting your own business can save you tax. Those of you who are listening on our radio, bergstudio.co.za, there's a shout out button at the top. You are welcome to give me a shout out there, ask me any questions you want, or just say hi. It's a bit lonely in the studio. And I will answer your questions as far as I can. Those of you watching on our social media channels, LinkedIn, Facebook, YouTube, and today we've added Twitch to our social media channels as well. So you can watch us on Twitch live as well. If you want to communicate with me directly in studio, I can't see all the social media channels. So on the screen, you will see my WhatsApp number. It's 082-801-6693. You are welcome to send me a WhatsApp there. In studio, I've got my phone right here, and I will be able to answer your questions. So please do not send me messages on the social media channels because I can't always see all the messages coming through. So please use the WhatsApp channel. Also, if you want to get hold of us, our info is on the screen. It is on that side. It is retirehappy.co.za. You can go to info@retirehappy.co.za, send us an email there, or just phone our office at 087-809-0603. As per usual, we cannot play music on the social media channels. They block us. But on Berg Studio, we are playing music, and we usually have a band of the week. And I've decided for the second time, some of you who know me will know why I choose this band. And the band for today is Mono Inc. So we'll play a few of their best songs today. So let's get started. Let's go for our first music break. And while we're doing that, we're going to play a short video of one of our previous shows talking about the 5 steps, or a summary of the 5 steps to retire rich and happy. And everything we do is based around these 5 steps that you need to implement if you really want to get to financial freedom. So you want to learn those 5 steps. So let's get started. Let's do those 5 steps, and you can have a listen. So let's get going into our topic today, the 5 steps to retire rich and happy. So let's start by first giving you a little bit of my background. I started in the financial services industry in 1999, so I've been in the industry for 22 years now, going on 23 years, almost a quarter of a century. And when I got into the industry, I realized there was 2 major problems in the financial services industry. The first one being the fact that the whole process of financial services is basically a selling process. It is people running around selling products to people without a lot of focus being put on planning, on creating strategies and education more first and foremost. The second problem was the retirement crisis, and that was highlighted to me because of my dad's situation. So those of you who don't know the story of my dad, he started working on the mines when he was very young. He worked on the coal mines for almost 40 years, and he did everything right. You know, the lessons that they tell us since we are very small: go to school, get a good education, go work for a company, get onto the pension fund, and then save as much as you can, live within your means, and at the end of the 40 years, you will have enough money saved up to live a comfortable retirement into your golden years. Now, my dad did all of that. He never took out his pension. He worked at one company. He retired, bought a house cash, didn't have a lot of expenses. And even after doing everything right, by 1999, he was retired for about 5 to 6 years. And the income just didn't keep track with inflation, and he started running into cash flow problems. So I looked at that and I thought to myself, you know what, if somebody who did everything they told us is the recipe to retire comfortably, still couldn't retire comfortably, there must be something wrong with the system. And that motivated me to start doing some research on how can we fix the system, because surely the best we could hope for after working for 40 years is not to retire with 50 to 70% of our incomes. There must be a better way, and that's when I started developing the 5-step program. So the 5 steps is as follows. So I'm going to quickly share with you the 5 steps, and then we're going to go from there and dive into each one a little bit deeper. So the first step is called invest in yourself. This is all about education and development. So developing you as a person, developing your mindset, and developing your financial intelligence. The second step is minimize your risk. And the importance of minimizing your risk is that you need to make sure that doesn't matter what happens to you, your life and your dependents' lives can continue in the same manner that you were used to. We aren't in control of everything that happens to us. We are in control in how we react to what happens to us, but we are not in control of what happens to us. So we don't know. You get in your car, you go to work, and a taxi skips the robot, he hits you and you're paralyzed. These things happen. We might think it only happens to other people, but the reality is it does happen. And if these things happen, you have to have your foundation solid, your financial security in place to make sure that your life can continue and your plans can continue so that you can retire comfortably. The third step, once we've minimized your risk, we then go to become an entrepreneur. So this is extremely important because you cannot think you will generate enough income from your primary source of income, that is your job or your salary, to save enough to get you to retirement. You need to create MSI, multiple sources of income, and we'll talk about that now. The key here is that profit you make from that entrepreneurial venture of yours needs to go and build a capital asset so that can become freedom income that will guide you towards your financial freedom. So that capital asset, once you've built it, you then go to step 4 of the process, which is invest in income generating assets. So you take your capital, you put it into an income generating asset, which creates another income stream. And then we create a generational wealth spiral. And as I say, when I go into each of these steps in a little bit more detail, we will talk about this generational wealth spiral. And then step number 5 is all about retiring happy, and that is called pay it forward. It is about sharing what you know, making a difference to other people's lives, or making a contribution to somebody else's success. So that is the 5 steps. Invest in yourself, minimize your risk, become an entrepreneur, invest in income generating assets, and pay it forward. And that is the 5 steps, that is the cornerstone of everything we do. This is what we teach people, and this is where our coaching fits in to help people do everything. Welcome back, everyone, and for those of you who are listening on our Berg studio, that was Mono Inc. with Revenge. And those of you watching on our social media channels, we went through a summary of the 5 steps, and everything we do is built around these 5 steps. So today we're going to talk about how starting your own business can save you tax. It's quite a long discussion, so I'm going to see how far we get. Otherwise, we're going to have to do it in 2 sessions. We're going to do today and next week. So if we can't get through the whole thing today, please tune in next week, same time, same place, and we will look at finishing this topic. So because it's such a long topic, let's get started with it. Again, before we get started, if you want to be in contact with me, if you want to send me a message, you are welcome to WhatsApp me. My number is on screen, and if you are on Berg Studio, you can just press the shout out button at the top, and you will get directly communicate with me in the studio. I've got the screen open here to my left. Okay, so let's quickly start talking about your own business offers tax savings. The more tax you save, the more money you have for wealth creation. Again, here's the thing. If you pay tax, let's say you pay 100,000 Rand tax a year, that is 100,000 Rand that you were going to pay to SARS. You can't do anything with that money. If you can structure your tax in such a way that you only have to pay 80,000 Rand, that 20,000 Rand is income that you have received tax-free. And you can invest that income to create more wealth. And that has a compounding effect over years. So the more tax you save, the more money you have for wealth creation. I see so many people, especially employed individuals, that are so scared of managing their taxes in a more beneficial way. They just say, listen, as long as I don't have to pay in, I'm happy. But that is such a short-sighted view. You want to look at your tax affairs and make sure that you only pay what you have to pay towards tax. So one of the smartest ways to build wealth is to save tax with your own business. It doesn't matter what type of business it is or how big or how small your business is. You can build massive wealth with it. Simply use one of Prestige Bulletin's unique home business opportunities and save thousands of rands in unnecessary tax. So like I said, Prestige Bulletin, I've been a member of them for many, many years, probably close to 20 years already, and they have some fantastic home business ideas. So every month you get a newsletter. In that newsletter, there's some business ideas, there's some tax savings ideas, there's some investment ideas. Brilliant newsletter to subscribe to. And the more you save in taxes, the more you have available to build wealth with. Having your own business entitles you to extra tax deductions, which salary earners may not claim. So if you are a salary earner, there's very limited expenses that you can claim back from tax. It basically boils down to any contribution to a retirement plan, whether it's a pension fund, whether it's a retirement annuity, whether it's a provident fund, that you can claim back from tax. Secondly, you can claim back any medical expenses within certain limits. But that's basically it. If you have a car, a company car or a travel allowance, there's some tax that you can claim back there. But other than that, you are very limited to what you can claim back. But the moment you start a business, it entitles you to extra tax deductions. So through a home business, you can also indirectly reduce your personal tax burden by claiming allowable tax deductions. This allows you to save more as you can legally pay the least amount of tax possible. This valuable information could save you thousands of rands. So you can help yourself and others by starting a business. It's not selfish to have your own business, as this will also create job opportunities for others. There are plenty of business opportunities through which you can easily start your own business, which require little capital and that can usually be run from a person's home. These business opportunities regularly appear in the Prestige Bulletin, and on the show we often have shows where we just talk about business opportunities that people can start from home. So keep listening every Thursday and we can talk about some of the business opportunities. If we finish this week with this, then next week I will have a show on a few business opportunities that you can start from home with very little or no capital. If we don't finish this week and we have to finish next week, then the week following that, I will have a show specifically on some business ideas that you can start. And even if you don't want to run your own business, you can easily employ someone to do it for you and still receive all the benefits. And that is the benefit of starting a business. Guys, if we look at South Africa as a country and where our economy is, the economy and the country will not be saved by government or big business. The economy is going to be saved by small business entrepreneurs. This is what our country needs, is more businesses starting, more entrepreneurs being created to create jobs. Jobs are not going to be created through the public sector, and jobs are not going to be created in corporate. In corporate, they want to get less and less people to do more and more. The only way we're going to create jobs in this country, the only way we're going to get ourselves out of this economic quagmire is to become or get more people becoming entrepreneurs. Setting up your own business and enjoying immediate tax benefits does not have to be complex and demanding. This is something that a lot of people are afraid of, is, gee, but now I have to register a company. How do I register this company, and what is everything involved? I don't have the money to register this company. So it doesn't have to be that complicated. You can immediately start a sole proprietorship and therefore qualify as a micro enterprise. So a sole proprietorship is actually you are the business. You don't have to register a sole proprietorship. That's a question I get a lot of the times. Where do I register my sole proprietorship? You don't have to register. You just become a sole proprietor, because that means you in your personal capacity is the business. Or if you prefer a more formal structure, you can set up a company and run all your business operations through it. If you structure it right, it can be seen as a small business corporation, which can also be very tax beneficial. Next, we look at these two business options. So let's quickly have a look at what a micro enterprise is and then what a small business corporation is. A sole proprietorship, a partnership, an existing closed corporation, or a company can all be classified as micro enterprises, which are only subject to turnover tax. So a micro enterprise, you only pay tax on the turnover of your business. You don't have to go calculate what your profit is. You don't have to look at any of that. You pay a small tax on the turnover. With turnover tax, you pay a percentage of your turnover as the only tax, instead of a percentage of your business's profit. Essentially, VAT and income tax expire. So as a small business, as a micro enterprise, there's no VAT that complicates your business, and there's no other income tax on your business. So turnover tax eases the burden on you as a business owner, because you don't have to keep detailed records of expenses, and you don't have to keep track of what is tax deductible or not. Furthermore, it can be tax beneficial for you, as you are taxed on a sliding scale. You only have to pay up to 3% of your turnover in tax, compared to 28% of your profit in a normal company. Okay, so how is that calculated? So turnover tax is charged as follows. On turnover of less than 335,000, this is per annum and this is your tax year, you pay no tax. If you start a part-time business at home that bakes Cook Sisters and sells Cook Sisters, and your total turnover is less than 335,000, all of that money is tax-free. You don't have to pay tax on any of that turnover. If you earn between 335,001 and 500,000, you will pay 1% of your taxable turnover over the amount of 335,000. So what that means is that is 165,000 Rand. You pay 1% of that. That's 1,600 Rand a year of your tax that you're going to pay tax on a turnover of 500,000 Rand. Between 500,001 and 750,000, you pay 1,650 plus 2% of your taxable turnover over 500. So that's 1,650 plus 2% of 250. That gives us another 2.5, another 5. That is 6,650 Rand total tax on 750,000 Rands turnover in your business. On turnover above 750,000, you pay 6,650 plus 3% of your turnover. So to be taxed as a micro enterprise, your turnover for the relevant financial year must not exceed 1 million. So if you look at that calculation, you will pay 6,650 plus you will have 250 times 3%, that's 7.5 plus 6.5. So on R1 million, you will pay 14,000 Rand tax for the whole year on R1 million. That is a total of 1.4% on your total turnover. Let me just make 100% sure. 1.4%. That's it on a micro enterprise. Only 1.4% on R1 million worth of turnover on your business. However, SARS also has certain restrictions under which a business is excluded as a micro enterprise. So you have to qualify according to these criteria to be seen as a micro enterprise. So persons who have any share or interest in another business can't become a micro enterprise in their personal capacity or have a micro enterprise as a business. If more than 20% of your income is earned from the provision of professional services, example, bookkeeping, education, consulting, financial service provision, etc., or more than 20% of the company's income is earned from investment income, and personal service providers and labor brokers cannot be micro enterprises. So what is a personal service provider? A personal service provider is if you have a micro enterprise or a business and you only give your services or supply your services or products to one company, or more than 80% of your income comes from one company, then you will be seen as a personal service provider, and therefore you cannot qualify as a micro enterprise. Despite the exclusions, you can see from the above that turnover tax is a simple tax system which can be beneficial for micro enterprises. But what if your turnover now exceeds 1 million Rand per year? So what if you go over R1 million? Then we first of all want to congratulate you on your successful venture. Well done. Secondly, you must deregister for turnover tax as you are no longer a micro business. But don't despair, you can still enjoy great tax savings. This brings us to small business corporations. So let's take a quick break. Let's listen to some music, and then we come back. We're going to talk about the small business corporation and the tax benefits of that. Those of you watching on our social media channels, we're going to go through a video talking a little bit about the benefits of having a financial coach. And those of you watching or listening on Berg Studio, we're going to listen to some more Mono Inc. Okay, so let's talk about the financial coaching. So like I said, the financial coaching I developed because I saw the knowing doing gap. People, it made sense, the 5 steps. They wanted to understand the 5 steps and wanted to implement, but then they battled. The moment an obstacle came, the moment something happened that was not fitting in perfectly into that little model, they didn't know how to overcome that. And that's why we decided to create the personal financial coaching model. Now, why is it important to have a coach, and what's the benefits of having a coach? Now, if you look at it from a sports analogy, because I think all of us understand that if you look at sport, you need a coach. So if you want to be the best at anything, you need to get a coach that can help you achieve that. The reason for that is that a coach has access to a lot of different people and have had access to a lot of different experiences. You basically start with only your experience. So if something out of the ordinary happens in your implementation, you have to look from your limited experience and say, okay, so how do I fix this? And because you have limited experience, you have limited options to solve that problem. Where the coach might have worked with 10 people, 100 people, 1,000 people, 10,000 people before, which now means that he's probably seen that scenario play out 10 times, 100 times before. So where you have to sit with a clean slate and try and figure out what the right solution is, your coach has seen this hundreds of times before, so he immediately knows. So what does that do? It helps you to not have to learn through trial and error alone. It saves you time. It makes sure that you don't get discouraged because of failure. Because if you don't have a coach that can guide you, how are you going to solve this? If you are really determined, you're going to try one thing. Then that thing might not work to solve your problem, which hits you back a little bit. Then you have to try another thing and go through trial and error until you find the right solution. Where your coach could have cut out all of that and just told you, listen, the previous times this has happened, how we solved this problem was that. There's a track record, this is how it's solved, and you just implement. So imagine the time you save. So by having somebody there with you that can guide you, give you advice, and tell you how to overcome obstacles, you are cutting your journey, the time to reach your goals by half, by 80%. So why would you want to go the long route if your coach can show you the shortcut? The second thing is, it's good to have a mentor or somebody that can keep you accountable. This is so important because it's so easy for us to bullshit ourselves, to go and tell ourselves all of the stories and give excuses and find problems for every solution. It's so easy to do that. But if you have a coach that you know is going to call you on your nonsense, is going to call you out when you are making excuses, then you have somebody that can keep you accountable, and you'll be amazed how honest you become with yourself if you know there's somebody that's going to call you out when you are not honest. The people we lie to most often is ourselves. We don't lie as much to other people as we lie to ourselves. And the moment you stop doing that, you can go on this journey to become successful. And what your coach does is he keeps you. Welcome back, everyone. And as I pause that video, it always pauses on the worst possible place. I just saw my eyes go closed for those of you who are watching on our social media. Welcome back, and we are talking about how your own business can save you tax. And before the break, we spoke about micro enterprises, which is a very simple tax system, and you just pay tax on your turnover, and over a year at the max you're paying 1.4% of your turnover in tax. Next, we're going to talk about small business corporations. So let's start talking or going through that. So just before I start, again, if you have any questions, you're welcome to WhatsApp me. My number is on screen, 082-801-6693. If you are listening on Berg Studio, you just press the button saying shout out, and you can communicate directly with me in studio. So a small business corporation, you may prefer to set up a company for your business instead and enjoy the protection it offers you against creditors, debt collectors, your personal liability, and potential claims against your business. Or your annual turnover may already exceed the 1 million mark, as we've discussed at the top. Whatever your reason, the good news is that in the form of a small business corporation, you can also save tax in your own business. Small business corporations are taxed on a tax favorable sliding scale, where in some cases you even have to pay no tax on your taxable income, also known as your profit. So let's look at how the tax is charged. On income of less than 91,250 Rand profit in your business. So this is your income comes in, your turnover, you deduct all of your expenses, whatever's left is your profit. And if that profit is less than 91,000 Rand per year, you pay zero tax. Between 91,251 and 365,000 Rand profit, you pay 7% of your taxable income above the 91,000. So your first 91,000 is always zero, and then above that you pay 7%. Between 365,000 and 550,000, you pay 19,163 plus 21% of your taxable income above 365,000. And on an income above 550, you pay 58,000 Rand plus 28% of your taxable income above 550,000. So what you must just keep in mind here is that is your profit. That is after all your expenses have been deducted from your turnover. And that's only the profit left. And we're going to talk a bit about what are the kind of things that you can deduct and how you can use that to save tax in your personal capacity as well. As you can see on the previous page, you can benefit by registering as a small business corporation. But again, SARS has certain restrictions that they place on small business corporations. So a small business corporation has to qualify according to these criteria. The shareholders of a small business corporation must be natural persons. So a small business corporation cannot be owned by another business. So you can't have one business owning the shares in the other business. Shareholders may not hold shares in any other private company or closed corporation. So if you have shares in more than one company, you cannot qualify as a small business corporation. The gross income for the year may not exceed 20 million. So that is, gross income is the turnover. So that is the total turnover of your business can't exceed more than 20 million. And no more than 20% of the gross income may be earned from investment income or for services as a personal services provider. So a small business corporation not only means tax savings for you, but can also improve the cash flow and liquidity in your business. So let's have a look at some of the tax benefits you can get by registering a small business corporation. No matter how big or small your business is, you will be able to benefit from tax deductions. The important aspect is that the taxpayer who did not previously have a business now starts one and operates it through one of the two business options as described above. So you might be a normal employed individual, and you are now going and starting a business, either a micro enterprise or small business corporation, and because of that you will get some tax deductions. So according to Section 11A of the Income Tax Act, operating expenses that are incurred in the generation of an income may be deducted from your taxable income, meaning that you are entitled to significant new deductions. So the law says that any expenses you incur while you are busy generating an income is deducted from your taxable income. So running a business, the requirement to be able to say you are running a business are few. You must simply try to actively generate an income. So the fact that you are actively generating an income is the proof that you are running a business. The sale of goods or services on a commission basis, home manufacturing like the Cook Sister example, practicing a hobby with income as your motive, painting or offering a garden service, all qualify as business activities. So the business must just have the potential to earn a profit. That's it. It doesn't need to have a profit. It just has to have the potential to earn a profit. The business doesn't have to be profitable. Your total deductions may therefore be larger than the income. However, it's even better if your business is profitable. On the one hand, you will enjoy financial prosperity, and on the other hand, you will be able to claim extra deductions which will reduce your tax burden. So let's look at some of these extra deductions that are allowed. The additional deductions that a business entitles you to include the following: pocket monies that's paid to your children as remuneration for the work they have done in your business. So if your children help you in your business by handing out flyers or doing some admin work for you or whatever, you can pay them pocket money and you can claim that back from your tax. Costs that apply to a section of your home used exclusively for business purposes. So if it's a home-based business, you have a portion of your house that you have set up as an office with a desk, with a computer, etc., etc. That portion can be deducted from tax. The tax deduction is based on the portion of your home that is used for business as a percentage of your home's total surface area. For instance, let's assume you use 50% of your home exclusively for business purposes. So if, for example, if your mortgage, bond, interest and insurance on your home, electricity, water and assessment rates amount to 270,000 Rand per annum. Remember, it is the interest on the bond, not the total bond repayment. So let's say that's 270,000. That works out to 22,500 Rand per month. 50% of that comes to 135,000, and that can be claimed as a tax deduction, whether you claim it in your business if it's a registered company, or from your personal income if you are a micro enterprise. A portion of your cell phone and home phone accounts can be deducted. That includes your internet, the fiber, all of those kind of things. All of your refreshment costs during work hours, which can be taken at any time of the day or night, whatever suits you. Entertainment expenses. If, for instance, you entertain a friend who is assisting you in your business, you can invite him to a braai and deduct the money spent on his meal, as well as what was spent on your family. So that's entertainment expenses. What I just suggest is really keep track of all the slips, all the expenses. If you have a till slip, write at the back of that till slip what you actually use that products for. Subscription fees on specialized and business magazines. This also includes the Prestige Bulletin. So I've been deducting my subscription fees towards Prestige Bulletin every year for years and years and years. Fuel, insurance and maintenance on the vehicles you use entirely or partially for the business. Just make sure that you have a proper logbook. An amount for the wear and tear of these vehicles. It is simply a book entry and, in other words, won't cost you anything extra, but you will still get a deduction, because the wear and tear is a percentage of your vehicle that gets discounted every year because your vehicle's value decreases. More examples of tax benefits. The benefits that a business offers you can best be illustrated by means of a practical example. Assume that Mr. and Mrs. Smith have been running a part-time business as a sole trader for the past year with the following cash results. The sales that they've made was 960,000 less 449,000. That was made up of purchases. They bought stock and then sold, adverts of 60,000, and then fuel for business purposes of 20,000. That leaves them with a cash profit of 511,000 Rand for the year. This profit means cash of 45,583 Rand per month in their pocket. So their business has generated cash in their pocket of 42,000. So they used a portion of their home for business purposes and have calculated a deduction for their home. This amounts to 135,000. Entertainment expenses for clients came to 48,000 Rand for the year for the private functions that were held at their home. They also used one vehicle which cost 800,000 Rand, including VAT, for business trips. The business kilometers totaled 80% of the kilometers that were covered during the year. License and insurance fees, as well as the maintenance of the vehicle, came to a total of 36,000 Rand for the year. Their two children help with admin in the business and each get 6,000 Rand per month. The profit for tax purposes can now be recalculated as follows. So they had 511,000 gross profit, less 515,800 Rands worth of expenses. That's home office cost of 135,000, entertainment cost of 48,000, wear and tear of the vehicle at 160,000, license, maintenance, and insurance of 28,000, and the children's wages of 144,000, which gives them a tax loss of 4,800 Rand for that year in their sole proprietorship. So let's quickly take a short music break again, and then when we come back, we're going to say what the actual impact of that tax loss is on Mr. and Mrs. Smith's situation. So again, those of you watching on our social media, let's continue with the video on benefits of a financial coach. Accountable, he doesn't allow you to lie to yourself, which means you're going to stop doing it because you know, I'm going to try and get this lie past my coach. He's not going to fall for it, and then you can just as well not lie to yourself. So that accountability is crucial. The next thing that is important in getting a coach, and why it's so important having a coach, is that you can run ideas by your coach. You might wake up or go to bed and have this brilliant idea in your head and say, yo, if I do this, it's going to work. It's going to be perfect. Everything's going to work. But because of your limited knowledge, your limited experience, you don't see all the pitfalls. Again, the coach has had all of this experience. He's looked at everything. He's done it before. So he can tell you, listen, it's a brilliant idea, but be very careful of this, or look out for that. And by doing that, again, he can save you all the trouble of going through a trial and error process to get there. So if you look at sport, just to give you an example, a very practical example. If you look at the Springboks rugby team in 2016, 2017 seasons, the Springbok rugby team was completely decimated. They were the lowest rank in the world, I think, in the history of Springbok rugby. They lost against Italy. Now, a lot of people talk about the loss against Japan, but what they don't understand is that Japan is actually ranked much higher on the world rankings than Italy. And in 2016, 2017, we lost against Italy in a test, the first time ever. So we were at the lowest point in our rugby. In 2018, Rassie Erasmus came on board as the coach, and he started working with them. And end of 2019, the team won the World Cup. We all know this. Did the people in the team change dramatically? No, it was basically the same core of players. Yes, there was players going out and coming back, but the core of the team stayed the same. What changed? Did that team's talent change? Did their ability to play rugby change? Did their strength change? Their endurance change? They were still the same people. What changed was the coach, the person that was telling them where to go, pointing them in the right direction, showing them what to implement and what not to implement. And they went from losing to Italy to killing the England team in the World Cup final. And that's in 2 years. Remember, everywhere else in the world, they have 4-year cycles. They prepare from the one World Cup for the next World Cup. Rassie had half of that, and he took that team from being as low as they've ever been to being world champions. That comes down to a good coach. Now, a lot of people think, but my coach, I can only be coached by somebody who's already a multi-millionaire, because how is he going to teach me how to manage my money if he's not a multi-millionaire already? But guys, that is a very short-sighted view of it. I'll give you an example. If we look at tennis, arguably the best tennis player that has ever played the game is Roger Federer. Yes, I know Djokovic and all these guys, it's arguably. But let's look at Roger Federer. He's arguably the best tennis player that has ever played the game. That means that there has never been anybody that can play tennis better than Roger Federer. Why does he have a coach? Because he can play better than that coach. If he and his coach plays a game, I promise you Roger Federer will probably beat that coach 6-0, 6-0, 6-0. Because he is the best that has ever played the game, but still he has a coach. Why is that? Why doesn't he go, you know what, I know it better than anybody else, I don't need a coach? And what's going to happen if he does that? He's probably not going to be number one for very long after that. The reason for that is that the coach can be objective where you can only ever be subjective about your situation. Your coach can see things from the... Welcome back, everyone. That was In My Heart from our band for the day, Mono Inc. Those of you listening on Berg Studio. Those of you watching on our social media, Facebook, LinkedIn, Instagram, YouTube, as well as Twitch. You have been watching a video on the benefits of a financial coach, and we're almost done with our show for today, and then I'll play out and just finish the last portion of that video. I think there's about 1 minute to 2 minutes left if you want to watch the rest of that video. If you want to see some of our other content, educational content, you are welcome to go to our YouTube channel. Just search for I Retire or search for #financially raw, and you will get some of our content there. So let's finish off with our chat about how a home base or how your own business will save you tax. So please take note of the following. Mr. and Mrs. Smith made a profit of 511,000 Rand for the year. However, after the tax deductions, there's a loss of 4,800 Rand, which will be used for tax purposes. So now they have an asset, they have a tax loss on their books. So Mr. Smith will include this loss of 4,800 Rand in his tax return. This loss can potentially be deducted against his other income, which will reduce his taxes. Even if so he can apply for it to be deducted from his other income. So he's earning his salary, he has to pay tax. This 4,800 then gets deducted from his tax that he needed to pay, which means SARS will refund him a portion. But even if SARS ring fences the business loss, in the past they were very flexible with that. So you could have claimed back any loss you had on a business from any income you earn. These days they tend to want to ring fence the business loss. But even if they do, if they say, listen, you can't claim it back from your normal expenses, it will still be sitting on your profile and can be deducted from future business profits. So if you have a tax loss and next year you have to pay 10,000 Rand in tax, that 4,800 will be deducted in the next year because that loss was carried over, and it can be carried over indefinitely. So although Mr. and Mrs. Smith indeed made a profit of 511,000 during the year, they pay no tax on that profit. So in conclusion, the most significant benefit of tax shelters is that the deductions can be claimed on items that won't cost you anything extra, and enjoyable activities can be used as a deduction. You can always obtain additional deductions through a business that you would not otherwise be entitled to, and this makes substantial tax savings possible. Nothing protects your wealth and helps you to create a better future than your own business. Guys, this is something I learned from Robert Kiyosaki in one of his books. He's the guy who wrote Rich Dad, Poor Dad, and he says the main difference between the rich and the middle class is the way in which they manage their taxes. The middle class earn money, they then get taxed on that money, and they spend the balance. That is the middle class. So you have no control or very little control over that portion that gets taken from your salary before you can spend. You know the typical thing where people say, oh, I don't even know what I earn before tax. I'm just worried about what gets paid into my account. You have to worry about what you earned or what you paid in tax because it's your money. So the rich has a small difference. They earn money, they make all of their deductions, or they spend as much as they can, and then they are taxed on the balance. You see that difference from earning, being taxed, and then spending the balance, to earning, spending, and then being taxed on the balance. That small difference makes all the difference in the world when you want to create wealth. So what you want to do is you want to start managing your expense or your tax in such a way that you can start moving towards managing like the rich do. And the only way you can do that is by becoming an entrepreneur, which is step 3 of our process, and starting a business, whether it's a sole proprietor to start out with, or if it is a small business, any way you want to start that business, you can start moving towards managing your taxes like the rich do, where you earn, you spend, and you only pay tax on the balance. Okay guys, so we did get through the whole topic for today. So next week's topic is going to be 5 business ideas that you can start from home with zero or little capital outlay. So if you're interested in starting your own business, you wanted to do something, you can come onto the show next week, and we will share, or I will share some business ideas with you that you can start from home. Thank you for joining me this morning. I really enjoyed going through this. Just one last thing. If you are planning to do this, guys, talk to your coach. Make sure that you are doing the right thing. You're starting the right kind of business. And also that the coach can help you get in contact with a tax consultant to make sure that everything you do is above board. This is not about avoiding tax. It is about making sure that your tax is managed in the most efficient way possible. It's not about not paying tax. It's about managing how you pay your tax. Thank you for joining me. I'm going to play out with the final portion of the benefits of a financial coach, and then I'll see all of you same time, same place next week. Outside, which you can't see from the inside. He can see things in the future which you can't see from your perspective. It's all a change of perspective that allows the coach to point you in the right direction. So I always say, if you want to walk through a forest in the fog, so there's this dark fog and all you can see is about 1 meter or 2 meters ahead of you. How do you get from where you are to the other side of the forest? Well, you walk 2 meters, because once you've walked 2 meters, you can see another 2 meters. And then you walk another 2 meters and you can see another 2 meters. And eventually you will reach the other side of the forest. And the point we make with that analogy is that you have to start doing something. Don't wait for the whole path to be clear before you take the first step. You have to start doing it. But where does the coach fall in or fit into this whole analogy? Well, the coach sits high up in the air on in an outlook point, or he's flying on top with a helicopter, and he can see the whole forest from the top, and he can guide you in your ear and say, okay, walk 2 meters, but walk a little bit to the left, because otherwise you're going to walk into a boulder and then you have to walk around the boulder. Walk a little bit to the left. You still can only see 2 meters ahead of you, but you've got a guide sitting on top which can see 30 kilometers ahead of you, and he can slowly guide you. Doesn't mean there won't be any obstacles, but he will help you to pass that obstacles with the least amount of effort. And that's where the coach comes in. He's got this objective view. Guys, you cannot have your wife as a coach. You cannot have your best friend as a mentor, because the relationship is different with that. There's emotional involvement there. There's vested interest there. It's important to have somebody that isn't emotionally invested in your situation, so that they can truly objectively look and guide you to where you want to go. Guys, we come from an education system that for generations have taught us how to be good employees and earn income. But then we start working, but they don't teach us at school or at university what to do with the income once we've earned it. How do we win at this game that we play our whole lives? So we get to 40, we battered, we bruised, our expenses are higher than our incomes, and then we look at ourselves and people look at us and say, but you've made some stupid decisions. Well, you don't know any better. You didn't have anybody guiding you and telling you, rather do this than that. That's where it's so important to have a coach work with you, because the coach can guide you. They'll educate you. They'll show you what can be done and can't be done, to the point where you will eventually be able to coach somebody else. So that is why it's so important to not go on this journey on your own. You need to have somebody that can guide you.
Financially raw, real, authentic wisdom with Lourens from Retire Rich and Happy.